Economic growth is expected to have picked up by about 0.4% in the third quarter from the 0.7% contraction recorded in the second quarter. Load shedding is expected to have hit energy-intensive sectors like mining and manufacturing, while the increasing cost of living would likely impact negatively sectors like retail, as consumer consumption is affected by the high inflation and high debt repayment costs wiping off disposable income.
The key sectors such as the mining and manufacturing sector have all been heavily impacted by the load shedding, for these are highly energy-intensive sectors. So we're expecting a little bit of a decline in those segments of the economy based on what transpired in the third quarter, where we had a massive load shedding in the local economy.
Despite the expected uptick in growth in the third quarter, others say the economy is still exhibiting weakness that is unlikely to create jobs that can address current socioeconomic challenges.
We have seen industrial production rise by 1.6% in the third quarter of this year versus the second quarter. This is a positive outcome, and of course it will add to the overall rise. However, we also saw retail sales contract quite significantly in the third quarter versus the second quarter, while we also have seen some poor conditions come through from the volume of transactions, and that is a bank serve index where they measure this. So overall, we think that the GDP reading will be a fairly mixed bag. However, we think that it will be slightly positive, not least due to the base effect coming through from the contraction in the second quarter as a consequence of the floods this year.
Bishop believes the fourth quarter will probably be weaker than the third quarter. The Reserve Bank expects economic growth to average 1.8% for this year. Gloria Sefako, SABC News, Johannesburg.